The Newsday continues here on One News Now Business. I'm Diego Castro. Here are the biggest stories on the economic and corporate fronts. S&P Global Ratings raised its GDP forecast for the Philippines this year. S&P sees the country's economy expanding by 5.4% this year from 5.3% previously. But for 2024, the projection has been slashed to 5.9% from the previous 6.1%. In its latest report, S&P says Asia-Pacific economies outside China remain resilient. Inflation has also continued to ease in the region despite recent spikes in energy and food prices. They also pointed out that the manufacturing purchasing managers' indices in Southeast Asia mostly improved. Despite these, the credit raters' projections are still below the government's target expansion for both 2023 and 2024. S&P also says it expects another rate hike this year before cutting borrowing costs by 75 basis points in 2024. Analysts earlier warned that the Bangko Central's higher for longer monetary policy stance may weigh on growth momentum. While S&P Globe has become a bit more optimistic with its forecast, the ASEAN Plus 3 Macroeconomic Research Office trims its GDP growth outlook for this year and even for 2024. In its annual consultation report, the think tank said it expects the Philippine economy to expand by 5.6% this year, lower than the 5.9% forecast it gave in October. Meanwhile, for 2024, AMRO expects the Philippine economy to bounce back based on an expected recovery in external demand. However, it still slightly lowered its GDP growth forecast to 6.3% in 2024 from the 6.5% it gave in October. This would fall short of the government's 6.5 to 8% target for next year. The think tank pointed out that the Philippine economic outlook is clouded by various risk factors and challenges. These include high inflation, economic slowdown in major trading partners, and volatility in global financial markets, along with tighter financial conditions that could pose risks. To weigh in on these growth projections, we have with us on the show Paolo Rivera, President and Chief Economist of the Oikonomia Advisory and Research Incorporated. Thank you very much for joining us once again.
Yes, good morning.
Yes, good morning. Okay, let's get right to it. The growth outlook for the country is mixed. S&P and it's a little bit more optimistic, while AMRO trims its forecast. What are your thoughts on these?
Well, the mixed forecast for the Philippine GDP growth rate can be attributed to the relatively still higher interest rates and imposed by the central bank. But again, the inflation is slowing down. But then this effect of monetary policies in the previous months could be hampering growth. But again, the Philippine economy is driven by consumption, which is kicking in as we approach the year end.
Yes, we're speaking because it's holiday, diba? And there's a lot of, I think this is the first year or the second year of when the economy is fully open. Now, the forecast is still below government target of 6.7%. Now, with all these things coming with revenge spending and holiday spending, do you think it's still possible to achieve this target?
Well, the target is still possible, provided that inflation could be tempered in the near term and that government spending together with investment spending would kick in as a consequence of the invitations of our government to many foreign investors to come into the Philippines.
Now, we were talking a while ago about holiday spending. Now, how big of a boost is this in terms of economic growth?
Well, in terms of economic growth, historically, data has been indicating that growth is always faster in the fourth quarter of the year, given the increased spending. However, inflation is also kicking in the latter part of the year, given a relatively higher demand compared to the supply that we have. And this is even compounded by the persistence of supply side constraints during the holidays.
You mentioned inflation, and the target is at 2 to 4%. Now, DOF Chief Jokno appears optimistic that inflation will eventually settle within the target in the fourth quarter. But for you, do you think this is really still achievable?
Well, the inflation target might not be
Ah,
possible
okay.
in the last quarter of the year, given that the inflation that we have recently has been supply side. But for the
Okay.
last quarter of the year, inflation may be driven by both demand side due to higher consumption and supply side, given the persistence of supply chain constraints, particularly in food and beverage.
Ah, okay. And the S&P also expects BSP to deliver one more rate hike due to inflation concerns. But economists like yourself have warned against this, given its potential impact on growth. For you, is another rate hike essential?
Well, for me, the rate hike may not be essential because for the previous quarters
Mm.
and previous year, inflation has been significantly driven by supply side constraints, by supply side problems, and the rate hike is actually very effective in managing inflation that is influenced by demand side, no? Because consumers would be reducing their spending because interest rates would be higher and it would be more beneficial for them to put their money elsewhere.
Mm-hmm.
But the rate at which we are going, the interest rate hike is effective, no? Only for demand side driven inflation, but it is very effective in slowing down growth.
Okay, but my question is, what else can the government do at this point in time to boost growth, while at the same time, keeping inflation in check, taming it? And what should we look out for, the risk factors, especially in 2024?
Well, alternatively, no, the monetary policies that we have now can be complemented with what we call non-monetary interventions, perhaps coming from our fiscal sector. One of this could be growth can be driven by productive spending, no, by government and private sector, wherein money is placed on activities or investments that will generate growth in the long term. This will complement the monetary policies of the central bank, which affects investments. So the combination of both fiscal and monetary interventions could help
Mm, okay.
stimulate growth, but at the same time temper inflation.
My question is also, given that we have this Hamas and Israel conflict and the possibility of an escalation next year, hopefully not, no, but in Iran and other Arab states. Now, do you think this will have a great impact kung it spills over to the entire region? Will this have an impact on our end, especially OFWs who might be repatriated back? They won't be able to send as much anymore back here to the Philippines.
Well, two things. Now, whenever there's a conflict in the Middle East, number one, our OFWs are greatly affected because of repatriation. They need to go back to the Philippines for safety purposes, which influences the remittance inflows that we have. Considering that majority of our remittances are also coming from that area. And number two, any conflict in the Middle East would also affect the oil prices, no? Since there's a tendency for OPEC to limit oil supply due to this conflict. And this will affect our country in such a way that oil prices will go up and inflation would be triggered to increase again.
And then my last question is, what sector should we look out for this coming year that could possibly boost growth and keep inflation in check? Are we looking at the BPO sector, industry, manufacturing?
Well, for the last part of the year and for 2024, there is always huge potential in the services sector, particularly in the BPO, and of course, no, in the tourism sector of our country as part of our bread and butter. We also need to look into developing further agriculture as it has a great potential in infusing growth, no, and tempering inflation at the same time.
Well, hopefully everything goes well with our new agriculture chief. Thank you very much for joining us. John Paolo Rivera, President
Thank you
and
so much.
Chief Economist of the Oikonomia Advisory and Research Incorporated. Good morning.
Thank you.
We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Diego Castro. Here are the biggest corporate headlines we are watching. Philippine Stock Exchange President and CEO Ramon Monzon says its capital rising may not reach 200 billion pesos next year. Monzon says, though, that this will still depend if the planned SM Prime Holdings rate or real estate investment trust pushes through. Energy executives expect the country's power supply to be ample next year, but will likely be tight, especially during summer amid higher demand. While some new power plants are in development, concerns linger about potential shortages beyond 2024. Energy leaders have since emphasized the need for sustained investment in both conventional and renewable energy sources to support economic growth and ensure a reliable energy supply. PSE President and CEO Ramon Monzon is expecting listed telco companies to post better results in 2024. Monzon says this will come on the back of strong demand for digital services as ICT firms roll out their expansion plans. Now, as joint patrols with the US and Australia take place in the contested waters of the West Philippine Sea, Filipino peace builder Colonel Ferrer asserts that the only way to resolve the impasse with China is to enforce the UN arbitral ruling won by the Philippines 7 years ago. Here's an expert of Cathy Yang's interview on thought leaders.
How do we move forward with the rising tensions and the presence of Chinese infrastructure?
I think we basically stand pat on the fact that international law is on our side. So that is the core position where we will get the support of the world on this. And then we continue to engage China, not to be anti-Chinese, which is very dangerous. We cannot rely only on the United States to do this. We always ended up being dragged into their wars in the past during the Cold War, and we don't want that to happen. So you can see China, for example, playing really a smart role in the international community, supporting a ceasefire and doing all of this facilitation, mediation in other conflicts around the world, right? So I hope that kind of experience in trying to build peace in different parts of the world also informs how they will address the problem in the West Philippine Sea.
Could we leverage on our Southeast Asian neighbors, especially as you have already created that the mediators initiative within Southeast Asia? Could there be plans to actually engage and help with the problems at the West Philippine Sea?
Well, there are mechanisms inside the ASEAN, like the Code of Conduct on the Seas and all of that. That's also taking some time because each country has different foreign policy with regard to China. In this region, I think it's really about a global alliance where that's committed to respecting international law that we need, a consistency in observing international law.
Catch the full interview with Miriam Coronel Ferrer, 2023 Ramon Magsaysay Awardee for Peace Building, tonight at 9 p.m. Philippine Standard Time, only here on One News. And those are the top business stories of the hour. I'm Diego Castro. Join us again at 2 p.m. We are One News. All sides, all the time.